Hey, welcome to Spilled the Beans. I am Tim Bratz. Today I'm sitting down with Luke Layman, who actually goes out and invests in businesses as sort of like a private investor, venture capitalist, kind of in between, and specifically works on service industry businesses. So different perspective, not real estate, more service consulting type businesses, and has a ton of insights on what's worked, what doesn't work, how to increase the value of these businesses in order to sell for big multiples. So I'm excited to sit down with Luke and learn the tricks of the trade. Luke, what's up, buddy?
How are you?
Good, man. Appreciate you coming across town and coming and sitting down. So, dude, I'm excited to sit down with you and talk about how you're buying businesses, right? If there's a lot of shiny objects out there, a lot of different ways that people can make money. I happen to be, heavy in commercial real estate, but one of the things I don't talk about often is I'm invested in many different other businesses too. Right. One of the things that you can't do is take a $10 million building and then make it worth $100 million, right? You can make it worth 13, 14, 15 million, but you can't make it worth 100 million. Or, a million trying to make it worth $10 million. But you can far more easily do that with businesses. So I have my hands in a couple other more service businesses and consulting kind of businesses, software business, and a couple other things. But dude, I'm excited for what you do, and I want to dive deep into exactly what you do, how you do it, and how you create that value. And I think now's a phenomenal time for getting out there and starting to buy some of these businesses and getting involved in some of them because of what's going on with just I think the population is getting a little bit older. A lot of the baby boomers who are like looking to get out of their businesses, and dude, they don't want to deal with the headaches that they're going to go into in an economic downturn over the course of the next couple of years. And so I think now's a really good time to capitalize on buying some of these businesses, scaling them up, and bringing some of the technology and the just new age kind of concepts that we know that maybe the older generation doesn't know. So why don't we start with I'd love to know a little bit more about your entrepreneurial journey. How'd you get started as an entrepreneur?
Yeah, well, mine's probably like everybody else. I stumbled into it, by accident.
Couldn't get a job.
Well, truth be told, so I actually was a fighter pilot for the first 10 years of my career, and I had aspirations to go to Delta Airlines, and I did that for a short stay and said I'm going to go to Delta before I figured out that flying people for money was not my idea at the time. But for me, I actually had a business, and I always had this intention of the business being a side hustle.
Quick aside.
Yeah.
What do you think about Top Gun and the new Top Gun?
Awesome.
All right.
I love it, man. I got a 6-year-old, so I took my 6-year-old to see it, and it's long, but I'm like, dang, man.
Yeah.
But you got it from a fighter pilot standpoint. You got to suspend disbelief, like same as watching a cop show, you know. So these guys are like pulling into the sun with no visors, and I'm like, you animals, you have to have a visor, So you have to let go of some of that stuff.
I love it.
No, I love it.
Kills the theatrical piece of it. But
Yeah,
all right.
Well, it's the same thing as like they're defeating a radar missile and they're putting out flares, which would defeat an infrared missile, and I'm like, you would never do that.
What do these guys think?
You animals. But for me, so I always had this intention of it being a side hustle, and what happened for me was I would close the cockpit door to this sterile cockpit, and I would feel unaligned, misappropriation of energy as I was flipping switches in a 737, and I didn't stay. I said I got to go.
Yeah.
So I think one of the principles that's worthy of discussion for any entrepreneur journey, whether or not you're doing real estate as a side hustle, listen to a couple of shows, firefighters that have doors on the side, and it needs to be aligned with your energy so that you're doing things that are continue to be accretive in nature. So the entrepreneurial journey for me started with the first business, and I kind of got that to steady state. And then I made a couple of mistakes with diversion of my energy into things that were not accretive. Took those lessons.
We all do.
And then now you say, okay, what can I do in a wealth building capacity that is accretive? So what I'm looking for is I want things that where 1 + 1 doesn't equal 2. So if I do this, if I make this investment in this business, can I do something with it the previous business owner couldn't that won't distract from me? So if I can take a 1.1 ratio to my 0.9 energy, or better, right? Can I get 2 times the return from your investment for what would take 15 minutes of my time?
Yep.
And I likely can do that in a lot of businesses. So that's kind of my entire strategy.
How do you do that in most businesses? Do you have a certain skill set that allows you to, take their customer list, and then all of a sudden they're not email marketing it to them, and you're figuring out ways, or you have a complementary business. Maybe you have a roofing business, and all of a sudden you're buying a gutter business, and now you can take this list and sell them that, and you can take this list and sell them that, and all of a sudden generate more revenue by 2.5 times.
Yeah. So I like to think that I'm really a strategist at heart, but truth in lending, I'm probably just a marketing guy, right?
Yeah.
I really just understand the marketing and value creation and offer creation. And one of the, an interesting component of it, my father actually had a business. And this was one of the first times that I realized, well, I can go into a business, whether I own it, control it, invest in it, take distributions from it, whatever it is. My father had the business for 30 years, and this is where it's important to look at energy management. He created a business for himself that was designed to spit out $100,000 a year of residual income.
Yeah.
And it didn't scale for a few different reasons. He didn't want to scale it. He didn't want to have employees. He didn't want to have to manage people.
Why do you think people don't want to manage people? Why do you think they don't want to have employees? Because you hear that all the time.
Yeah.
I built up a team, I absolutely hated it, and so I scaled back my business. Or I don't even want to start growing a business because I don't want to deal with people.
Yeah. First of all, leadership is not natural. There is no, if you go back to the way that we were born, it's not like anything in our childhood says, you know what, you should take a small team of 3 to 5 and go lead them. We don't learn that then. Mine is a little different. I went through very specific leadership training. I went to school for 4 weeks to learn leadership twice in my Air Force career. I had small unit leadership as a fighter pilot where I was leading 3 other pilots in the airplane. So I practiced leadership for a very long time. But if you're a technician, if you're very good at a skill or trade, it's taxing to deal with the human factors of another person.
Agreed.
And frankly, I think that what I see folks doing a lot is they get stuck in the worst places. If you go from a solopreneur, it's just you, high ROI, to a small team of 2 to 3, there's a potential that you don't actually make any more money. Because you need to scale the revenue significantly. You actually have to make the commitment to go all the way through that.
And dude, it's like starting a new business. It's a new skill set, and chances are you're not that good at hiring, and your first 2 to 3 aren't going to be the best hires, and so they're going to be the biggest headache.
Yeah.
And you never even get past that. I found.
That's right.
It's a lot, and they're like, I'm not even dealing with this because, well, you didn't screen them properly, you didn't train them properly, you didn't measure their performance properly because you didn't know to do that. So the reason you had such an issue with building out a team is because you didn't know what the hell you were doing.
That's right.
And what I found is as my team has grown, as my business has grown, it's not that hard to build out a team because now I have other people who manage those people, who manage them better than how I could manage them. And because of that, they bring on more A players, and they're screened more properly, and they're trained more properly, and they're measured. Their performance is measured more properly than I ever did it on my own. So it's actually better, And then I find that there's redundancy in certain roles. So if somebody quits when you only have 2 or 3 employees, and they're your only bookkeeper, dude, and then all of a sudden you find yourself, versus when you get to a bigger business, if you can get past that kind of hell zone and then have 2 bookkeepers or 3 bookkeepers, then have a couple people on the operational side. If somebody quits or somebody wants to go on vacation, it's not the stress on the business and the stress on you as it was early on. So I think if you can get through that very difficult kind of preliminary phase of building a team and then get up to a point where you got to be doing a few $1 million at least, probably $4, $5, $6 million before you can really have redundancy in roles. But then it's like, wow, this gives me the actual lifestyle that I'm looking for, and it gives me the business that then makes it sellable, that then makes it more scalable because I've gotten through that difficult phase. But I found most entrepreneurs who hate scaling a team never get through that phase, and they're in that hell zone. They're like, and I totally get it because you don't want to deal with that.
There's a few concepts there, and resistance is one of those. We'll talk clarity here in just a second as well. But what happens? It seems as though, and I'll use my father's business as an example, is you get through that place, and you talk about all the different components of leadership. KPIs establishment, process and procedures, expectation management, is that you feel that little bit of resistance and you go, I'm going to move back to something comfortable. So on my show, we talk a lot about brain science, and one of the components of it is that your brain is designed to keep you safe. It's like gravity. So you've got this amygdala that's working to keep you safe, and you go, well, that doesn't feel very safe. You have a predisposition to return to a safe component. and you see the world through your learned and lived experiences. But in reality, if I can just open the aperture for you just a little bit, and you can see that actually just on the other side of that,
you're safer.
You're safer. And actually, frankly, more safe, right? Because you now have more people to delegate to,
Right.
more people with a vested interest in it. So, resistance is one of those things that, and I feel it this week, as you kind of get into some overwhelm and you go, I need to pull back. And you need enough of those life experiences that you push through it a little bit.
Yep.
So, two components. I look for that when I'm investing. If someone is at the point of resistance and I can see what's on the other side of that, it's investment grade.
Yeah.
Because
I like that.
I need to just push them through it, or I either need to go put someone in who can take it to the other side.
Yep.
So the other thing that you kind of brought up, and I think it's important for business owners, and it doesn't matter, your show is about real estate, but it's an asset class. It's something that appreciates in value, and it creates some wealth building category. You have depreciation, depreciating assets. Same thing for businesses.
It is
Just
a
different
business. It's
asset.
just, it's a different product, right?
Product.
I have a different type of product. I'm not selling widgets. I'm selling rent. And so, but you still look at it and value it the same, similarly in that income approach, right? What's the income minus the expenses equals the NOI? Can you sell it for a multiple?
Right.
In real estate, that's a cap rate, or there's an actual multiple of value when you're looking to sell a business. So yeah.
So I think what you kind of hit on there in leadership, and it doesn't matter real estate or business. If you're going to scale in any capacity, you cannot get to 4,000 doors without a team. You can get to 10, 20, 30, 50, 100 maybe, and you can manage it, but you have to build a team.
Yep.
And the component that comes up the most often is that when you're leading a team, it can never be any more clear for anyone below you than it is for yourself. If you lack clarity in the vision, no one else can see where you're going. If you lack clarity in the day-to-day processes, no one else can see it any more clear than you can see it. So I think and you mentioned here as we started this show, is that you're going to spend some time over the holidays. So as people, listen to the episode is released, we're through the holiday season, but you're going to spend the week between Christmas and New Year's setting your goals. And I do the same thing religiously. And I'm very articulate about it because it can be no more clear for anyone else. My family, my children, my wife, my employees that I know it to be. So I think that's important for everyone to know. I don't do a whole lot of real estate investing. I don't know anything about real estate investment. That's not the asset class that I operate in. But I know that about myself. I could go deploy capital wherever into someone else, the Tim Bratz real estate empire, because real estate.
Right.
I don't need to learn it. I just need to deploy capital.
And I think that's an important piece. I want to talk about where you get your capital from, and also we were talking a little offline about you invest more heavily in the jockey than you do in the asset class, right?
Yeah.
So first, where did you get your capital from?
Yeah.
Do you go and raise it outside capital and then redeploy it?
Depends.
Or you just kind of stockpile your own cash and then utilize it? What do you do there?
So I love playing the game that everybody else plays. If I watch what a private equity firm does or a venture capital firm does, a private equity firm doesn't go in and deploy their own capital. They go in and deploy a portion of their capital, LBO, they leverage it against debt. And I'm playing the same game.
Yep.
So I'm going to go deploy a piece of my capital. And times are changing now as inflation continues to rise and interest rate rise, but money was more or less free. So our parents went through the time where it was 15, 16, 17% to get into a house, and we were borrowing cash at 2.5% or 3%. And it was
free money.
It was free money. The only thing that I haven't done I don't know if you can even do this, but the concept of borrowing cash just to deploy into a stock asset, I'm going to borrow against myself to deploy it, and it's circular, and I haven't done it yet, but maybe there's something there. But the answer to your original question is, it's really two parts. The first is, where do I get cash? Either use my own cash, or I go leverage it to go get debt.
And you leverage that with other people's money, or you leverage it with traditional financing?
I only take equity stake, hard money, angel, if the person is going to add value. It has to be accretive in what they're personally going to add. If it's just debt, if it's just cash, I don't want hard money, unless I can't get it. Well, first off,
Just 'cause it's more
it's
expensive?
too expensive. Yeah. So I mean, the same thing. If you just said, hey, I'd like a hard money loan, I say, okay, it's 12%, 15%. You're going to hold it for 90 days, and it's at risk for me. I don't particularly like that, and it's
As the lender or as the borrower?
well, I love it as the lender, right? If I can measure the risk.
Yep.
As the borrower, I haven't had a necessity to do that yet. But I think that the component.
What if there was a business who's like, I got to get this thing sold? It's, we're recording this in December. What if there's like somebody, I got to sell this thing by the end of the year.
Yeah.
I need cash, and if you can't go out and get debt, I've always made, one of those arrows in my quiver is private money. And so if I can go and pay somebody 12% or 15% and borrow their money for 90 days just so I can go and buy this business or piece of real estate at a deeper discount, dude, that me paying the higher interest rate in order for easier and faster access to that capital, dude, I would do that all day because I can build that into the cost basis of that asset.
So here's why I haven't gotten into it yet. I see the logic in it, but businesses, and they don't differ significantly. There is a human decision behind a real estate transaction, for sure, right? Somebody needs to sell an asset for whatever reason. Their parents are aging, they want to take more vacations, they don't want to manage it anymore, whatever the case is, they're going to get out of the asset. So there's a human factor to that. In businesses, there's more flexibility. So if I'm going to buy a commercial piece of real estate for you, there's going to be a transaction in which there's a piece of paper that goes from you to me, and I'm going to pay in full for that. You're going to receive the full sum, and however I get the funds for that, it's up to me, right? Private money, however I want to do that. But you're going to get the sum in full as we transact. Businesses, I have an enormous amount more flexibility in. First of all, I don't have to take full ownership of the business, and I might not want to. I may only want to own 50% or 49 or 51, 90, 10, 1%, which we kind of talked about in the beginning, is I can take full control of the company but only own 1% of it by a simple change to the operating agreement.
And depending on the type of entity that it is, you can take distributions disproportionately also.
Sure. I can call it any number of things. I can take bonuses, I can take consulting
bonuses,
fees, whatever it is.
Right.
So I think the reason I haven't done that is because I haven't had to yet. So when I talk about the human factor in it, when a business is distressed, which is what I look for, either high ROI or a distressed business. And it's usually the business owner is what's distressed. They want out of it, they had a child, they have a life circumstance, whatever it is I just have to, it's just sales. I have to figure out what your motivator is, and then I can usually transact when I figure out what problem you're trying to solve. You're moving towards pleasure or away from pain. And if I can figure out what that is, I can usually get the transaction done by getting you closer there. So, a lot of times people go, I want to sell my business for $1 million. And I go, okay, why $1 million? Well, I think it's worth 10 times net revenue. Okay, well, where did you get that from? I got that from Google, right? And if that's our starting negotiation point, I go, why do you want $1 million? Well, I really just want out of the business. I don't want cash. Okay, now we're getting closer. If you just want out of the business, now I need to figure out why you need out of the business. And we get a lot closer and go, okay, well, I don't disagree with you the $1 million is the valuation. I just don't want the whole business. I'll take 40% of that. So now we're at $400,000, and I don't want to pay you for it all right now. I want you to sell or finance that. How much do you need up front? Well, I really only need about $100,000. Okay. Now we're somewhere, right? So you're seller financing. So there's just a lot of creativity that I can do in the business transaction that I can't do in a real estate.
Dude, I think that's going to own the next couple of years, dude. I think creative financing, creative structuring, where money's just been so easy to come by. It's been easy to go to a bank and get a loan at 3 or 4% in order to go buy a business or go buy a piece of real estate, that nobody's ever learned these creative structuring concepts. And I think for those of us who know how to structure it that way, as these interest rates are going up and as the banks are kind of pulling back, or loan to values are coming down, or debt service coverage ratios need to be met, whoever can creatively structure these things you're going to get into a lot of different businesses where other people they're not creative enough. They're looking at surface level. Hey, here's what it is. Here's what the financing cost me. I can't pay that price.
Here's an interesting thing about businesses too. Again, real estate. Let's just use commercial real estate because you're in the space. You can look at the forecast value of a property, and you can have a relative high. That's where your secret sauce is. You say, I think if I take this property and I add this value to it and I hold it long enough, it's going to have this value. One of the easiest ways in a business transaction, so if somebody's trying to sell their business, they're going to listen to me. You're getting all the secret sauce here. Someone says, I think my business is worth $1 million. And I go, good, I believe you. I want you to hold 60% of it. And then I want you to take the reward from what you do with the company. I'm just going to take a small portion of it. And they go, well, I'm actually not sure that I'm able to really generate the revenue that
Yep. That's great
expectation
point.
is.
Yep.
I say, I'm only asking you to advocate for what you really think it's going to do.
Yeah.
So if you're at $3 million this year and you believe you can be at $5 million next year, I want you to keep 60% of it. And I'll go for that ride with you, but I'm not going to pay you for the valuation of the 6 today.
Yeah.
We'll share in the benefits tomorrow. And very quickly, people go, that was inflated. I don't actually believe I can get it from 3 to 6.
Yeah, exactly.
Now we're negotiating.
Exactly. No, man, I mean, it brings out the truth in what they can do. So, but I like that. It's like, hey, we're in the same boat, rowing in the same direction. If you believe this and you can prove it, then I'll pay you for that.
Right.
If you can't, I'm not going to take on the risk and the liability and pay for the value that I'm going to bring or that you cannot bring in the future, and just shooting straight with somebody and having that conversation, all of a sudden, things change very rapidly.
I think there's a disservice that business brokers do in the industry too. I look at a lot of businesses that are micro businesses, and they've got an inflated sense of worth of the business. So when I put an offer down, I go, this thing's valid for 10 days. That's it.
Yep.
Don't come talk to me in 30 days.
Yep.
And business brokers go, hey, that's you're going to get a bag full of cash, and you'll be able to retire to the Caribbean, and that's going to get even worse for sellers right now. This is absolutely buyer's market.
Very much so.
There's not going to be a whole lot of people with those bag full. Real estate right this second is almost slowed to a halt in the commercial state because of the cash, because of what the banks are doing.
Yep.
As values fall. So when I look at a business and I go, where's the value in it? First of all, business owners generally aren't prepared for exit. So what do I look for? Customer base, sales staff, monthly recurring revenue, things that I know that I can take a tangible asset against.
What size business do you typically look for?
Well, it depends.
Does it need to be over $1 million or a certain number of employees? Or
So I think we kind of got into it in the beginning. Well, I will not buy a business that I have to manage. I actually looked at a business down here in Mount Pleasant. I could tell you it was in, because we're here in South Carolina, it was a retail store, a pet store. And it had 3 employees, and it was spitting out about $30,000 a year in bottom line revenue. And I'm like, I can't do anything with that.
Yeah.
I can't manage it. I would have to buy a manager. And frankly, for what you're paying the manager, I would have to pay them more to be a manager of the store. There's nothing that I can do with that. And
because the owner was essentially working their job.
Or working their job.
Yep.
Yeah. Now, what could I do with it? If I were willing to do it, well, I would go take that single store in South Carolina, growing population, and I would go make 5 of them. And now
or
I can
create
do
an
something.
e-commerce side of it that did mailing and
Subscription based.
Yeah.
There's a lot of things that I can do with the property, but what I can't do is I can't overpay you against the asset value today. And if we can't get to that number in the first place, then the whole deal is dead. So it really depends on the valuation of the business. I look for a few different things. Gross revenue is one of those, so I can do something with the top side, usually because I can leverage debt against it. I can do something with the bottom side of the P&L, so if you're just spitting out cash, I can do something with that. And then I can do something with the assets as well. And that's where people really either overvalue their business or undervalue their business because they don't understand the asset. So I'll go back to that discussion point. I say, what are you doing with your customer base? How many people come in the store and make a transaction, and do you have their email address? Can I market to them on the backside? we don't keep their email address. Then you need to do something to capture their email address. Put a QR code up front, give them a discount, whatever it is, and that becomes an asset of the thousands of people that walk through your door on a daily basis. So it depends, and I think it goes back to the beginning discussion to go, is it accretive based on what I'm doing?
Yep.
If it adds value, if I can take 1 + 1 and put them together, then I may make something work that you couldn't see.
Have you ever looked at well, first of all, I think it's interesting because a lot of the guys that I know who take and buy into businesses, they're actually running the business. They're actually going through the stepping in, the operational side. They're bringing new operators. They're a lot more involved than what it sounds like you do on that side. When you are meeting with a business owner and you're looking to buy into their business, do you ever do like a personality profile or behavioral profile? And do you find that the greatest operators fit some certain personality profile? Have you ever done that?
As in like an actual have them take a disc assessment?
Yeah, like a disc assessment.
I've never asked them to take one. I would say that.
How do you know that they're a great jockey? How do you know that they're a great person to bet on?
Yeah.
Everybody talks a big game. Everybody,
Right.
hey, I can do this. I'm going to do that. Like, how do you know that they're going to be a good person to invest money into, and they're not going to drive this thing into the ground?
So there's two for sure.
How do you protect your investment in that regard?
The first is whether or not I'm looking for the owner to stay. And if I want the owner to stay, then that's where I'm looking for the jockey.
Got it.
If the owner's going to leave, and this is where most people get awry, they've been paying themselves too low to preserve the bottom line, right? They knew that they were going to exit, so they say, I'm running the business, I've been paying myself 60 grand. And I go, but it wouldn't cost me 60 grand to replace you. It would cost me $90,000 to put a program manager or GM or something in that thing. So when you say I've been paying myself 60, I've been spitting out 100K bottom line revenue, and here's my owner's benefit, I go, it's actually the invert of that.
Yep.
The owner's benefit is actually down to 50 or 60K because you're underpaying yourself. But what do I look for? So, there's everything that I do is values driven. And my core values,
Smart.
Integrity for sure, communication, initiative, and accountability. And I look for that. So I'm measuring
communication,
people.
Initiative, and accountability.
Yeah.
Can you break into each one of those?
So integrity is a showstopper from the very beginning. Anytime that I look for an integrity, if we get to a place...
People throw that around a lot. What does it mean to you?
Do what you say that you're going to do when you say that you're going to do it. Yeah, I need, truly, I need to trust that you're going to be able to do what you say that you're going to do.
How do you take the temperature on that?
Micro temperatures.
I was going to say, are there micro commitments or micro tests that you put out there for them?
Yeah. Well, so one of the things to get into the integrity discussion is when I was in the Air Force, we used to say integrity first, service before self, excellence in all we do. Those were the 3 core values. And I go, integrity first. Okay, sounds good. And I used to say that I had integrity, but I'll tell you, and as a parent, you probably have seen this. I found that I was breaking my integrity, my personal integrity, a lot. And it wasn't big things, but at Disney World a few years ago, and I just recorded this on my show the other day, I was at Animal Kingdom, and I was waiting in line with my daughter, and my wife was not going to ride the roller coaster. She had a fast pass. I said, well, you go scan your fast pass, and then I'll take your thing, and my daughter and I will go ride the roller coaster again. And I go, wait a second, you're cheating. You're actually cheating the other people that are waiting in line. And I found that I was out of integrity. And then a few weeks later, I was actually in North Carolina, and I was zippering into a lane of traffic, and I'm like, you assholes, like you shouldn't be zippering, right? Yeah. But what did I know? As I actually knew that the 50 cars behind were going in the same place. And as I was zippering, I was actually cheating because I was cutting in front of those people. And I found that I was out of integrity in those moments. So I really, the integrity piece, I had to get clear with myself to go, are you in integrity? And there's certain times that I'm not fully in integrity with all components. I can't be in integrity with what I want to do with my family sometimes and doing my business. Right. And I have to make sure that I slow down enough to reconcile it. So what do I look for in business owners? Are you cooking the books? Are there things that when you're presenting the books to me that you've misrepresented? And if you've willing, and I'm all for recast financials. I get it, right? Show me where you've moved things around, misallocated or reallocated, and I can understand those. But are you lying?
Yeah.
Are you hiding something from me? So integrity is, I look for it all the time, but I also, at this point in my life, I fancy myself a pretty good judge of character, and I can usually sniff it out pretty quickly.
You've been around the block enough times, man, where you understand. Yeah.
Communication, initiative, and accountability are the other ones. So I am sniffing out the way that a business owner is going to do all of those immediately.
Yep.
How do you communicate? Do you send me dumpy little one-liner emails back? When I ask you a specific question, do you give me the answer or do you skirt the answer? Are you being proactive? Are you showing me initiative? Are you showing me that you're giving me more without me having to ask? And then accountability is, do you do what you say you're going to do? That's part of the integrity piece is, can I rely on you to do what you say that you're going to do? And I do that in all my businesses. I do that in my own life, is I rely on those core values to say, can I measure success? So, some of those things, we break those things real quick, and I go, I wouldn't be able to do business with you, frankly, because you're lazy. The reason your business isn't profitable is because you're not actually working that hard on it.
Yeah, exactly.
So,
exactly.
Yeah.
So are there certain asset classes that you really hone in on?
Yeah. So I got that. I had to figure that out because of how wrong I got it. So I actually invested in a radio frequency manufacturing company. I am not an engineer.
Yep.
And I have never had any expertise in manufacturing. Didn't know anything about Scrum, Agile. I know nothing about that stuff. And I toiled in the business for too long without adding value to it. Now, did we do revenue? Yes, because I'm a good salesperson and I can generate revenue. But I wasn't actually adding value to that. So, after a couple of failed investment attempts, I really look for businesses that I can add value in, and those are specifically service-based businesses. And there's some things that I'm looking to
typically do. Like in the trades or consulting businesses, or what?
Consulting agencies, education-based businesses. Really, what I look for is like bookkeeping businesses are great. Marketing businesses are really funny. Marketers are really very good at one thing, and business strategy is not one of them. They can build great websites, they can do social media, they can do whatever they're going to do, paid spend. But when I look at their business, I go, you're leaving so much money on the table because you're really only doing the one thing that you're really good at. I'm a social media company, so I have a great social media presence. But your offer sucks, right?
Yeah.
So I'm looking for places that I can add backside value for that. A lot of those is monthly recurring revenue. So what can I get you into a subscription model? And I'll give you an example in my hospitality business is, what can I get someone in, what can I get them to pay $50 a month for in perpetuity, like a gym membership? Well, I can offer them something, and I don't have to get a lot of people, but I can drive traffic by simply creating a new offer.
Yep.
And I think that's where a lot of business owners get wildly non-creative.
Yep.
So that's
no,
what I'm
I think that's a critical piece, man. It's just understanding pricing, understanding what's available, not overcomplicating it, and at the same time having multiple different offers at different price points for different types of buyers and consumers that want to be involved in that. So are you looking from an exit strategy? When you go into a business, do you know what your exit strategy already is?
I generally have a primary, secondary, tertiary plan. I know a way that I want to get out of it.
Got it.
And yeah.
And is that usually just taking that business, scaling it, and then selling it, or is that scaling it or consolidating a couple of businesses, together and rolling them up, or is it sometimes just a purchase for a long-term cash flow kind of a play?
I really have about 10 strategies that I look to employ. Well, one of them is when I look at a business. When I talk about a business owner being distressed, distress is just a temporary thing, generally, right? Unless you've got terminal cancer or something like that. We kind of talked about boomers and kind of getting to the end of their life cycle. But generally what happens is a business owner gets distressed for a temporary period.
And they make a long-term decision based on that temporary circumstance.
Yeah. So I usually structure the deal so they can get out of it. So I say, I get it. I'm going to help you for a short period. I'm going to take 40% equity in the business, and then I'm going to allow you in 24 months to either sell the business, we'll sell it together, or you can take it back and buy me out, and here's the favorable terms. Right? We're going to take the future valuation of the business that we create together, but I'm going to sell or finance it. So I'll give you that back out, and you'll pay me out of the residual profits of the company. So I really come in almost like a triage, just what business consultants really should do.
I like that. Yeah.
But they usually come in, they go, here's my $10,000 fee, plus a $1,000 monthly retainer, and I go, that's so wildly non-creative. If you really believe in what you can do, take equity stake in the company.
For sure.
And give them an ability to get out of it. So it becomes low risk for the current business owner. They get out of the pain that they're in right now, I'll come help them. And then when their life circumstances have changed, I'll give it back to them.
Are you always bringing money?
Mostly, yeah.
Okay.
Yeah.
Well, I think, for somebody who has your skill set and your understanding and your experience in the business, and I've seen this in a lot of the real estate stuff, right? So we do similar things, just in different asset classes. But there's people who bring me deals and they want me to bring money. Sometimes they're like, dude, I can get the money myself. I can operate it myself. I found the deal myself. I got a team who can handle this thing. This is a bigger deal than I've ever taken down, and I'm not comfortable doing it on my own. I just want somebody in my corner to bounce ideas, bounce questions off of. Or can you help me structure this in a certain way? Then they're willing to give me equity without any investment, right? Because I can go in. I think one of the strongest conversations that you could possibly have with somebody is, all right, yeah, you're doing $1 million a year right now in revenue. You've been stuck there for the past 6-7 years. If I can come in, I don't want to touch any of that $1 million. I'm not going to bring any money, but I'm not going to touch any of the $1 million. But I want 40% of all upside, beyond $1 million. And so you're making, $80,000 a year net right now. Anything above that, I get 40% of, and let's see what we can do. There's no cost. I'm not adversely affecting your business right now in any way by me coming in. I'm only bringing value, and I only get paid for that value. If I could take you to $5 million, and we can make $600,000 a year in NOI or something, can I get 40% of that? I don't think any business, I think there would be very far and few between business owners that would say no to something like that, where it's just a no-brainer offer, being able to.
Arrogance and ego.
It would be ego.
Straight ego response that goes, I'm going to do it myself. Well, okay, then that would break my core values, and I would say, well, then do it.
Understand?
We would be good partners anyway.
Yeah. No, I think that's a great. I mean, dude, there was a guy who has a traditional business, health business, consulting business, trying to get into real estate. He wanted to sell one of his properties, and we're going through he got introduced to me somehow through some other mutual friends, and I said, hey man, here's what you should do. It's structured exactly this way. I've done it multiple times on some of my own Airbnbs, and he's taken like this health retreat and health oasis that's got all this like biohacking stuff and red light saunas and the bath cold plunges and the hot tubs that's like an infinity, all this other stuff, and all these like circadian rhythm lighting throughout the house and all these things, and he wants to turn it into Airbnb, and he's like, I just have no idea how to do it. I say, hey, kick me 10% equity in this thing. I'll structure the whole thing, and you take it to your people. He already owns the property, so he just wants to turn it into an investment because he doesn't want to sell it, and you're going to raise capital from your own equity investors. I'll show you exactly how to do it. I'll jump on a webinar with you, and I'll do this. You kick me 10%, and then if you want my company to manage it, we'll do it for less than what an Airbnb rental management company would do. Yeah, and I want access to the house 2 weeks a year or something. And dude, so I'm able to just bring my skill set in, bring none of my own money, right? None of my own credit, help him solve a problem. And it gets me equity into a deal that then helps build wealth over here.
So you said something that's very important, and I take wild offense to a lot of businesses that don't lead first with value. So when you talk about something like that, and someone says, I get this deal, it sounds to me like you can add enough value for free. Well, here's the way that I would tackle it. Go do these 3, 4, 5, 6 things. They go, man, Tim, that's fire. If I just go do those things by myself right now, I'll figure it out. Is what happens, and I hear these transactions a lot. People DM you and they go, I'd like to do lead generation. I'm like, well, generate leads then. But you're asking for the fee up front. I'm telling you, here's what I need leads in this category. Go generate me leads and I'll pay you for performance. And that's not how we work. Well, that's unfortunate because that's not how I work either.
Exactly.
And so for me, it's always leading with value. And I'll show you for a not insignificant amount of time, if I think there's a play for me there, I want you to win. And I'll have so much equity invested in our relationship that you'll feel obligated to come back to me. People give me gifts all the time.
For sure.
$100, $1,000, here's this thing, thanks for the help, because I've already put equity into it. And then the deal flow happens. There will be plenty of opportunity on the backside. So I think that's, you asked the question, do I always put cash into it? Generally, for where I am right now, because most times I need a little cash flow for whatever component. I often leverage it, right? It's, you go into a business, you say, what's your line of credit? And they go, well, it's 50 grand. I'm like, well, Jesus Christ, you're doing $1 million, dude. Let's get you a $500,000 line of credit,
Yeah.
and I'll throw some cash in to clean your books up a little bit so that we can go leverage further debt and you can cash flow your growth.
Right.
But I think for folks, especially listeners of this podcast who are saying, how do I do wealth building activities? My asset class, businesses, there are thousands of things that you can do to add value into a business that a business owner doesn't know. And if you can structure the deal that you can add value and give them the out, you don't need to buy the business, you don't need to take 100% equity in it, but like you said, you could say, I'll take 10% equity and I'll fix your procedures. You take 10% equity and I'll fix your bookkeeping, your accounting. And that's where business owners just stop. So if I own a bookkeeping service, and I know, Tim, you know what, I could come in there and I could really do some things. I could restructure your chart of accounts. I could make your business a lot more efficient. And then you can take that and leverage that at the bank, right? So here's my 25-page bank letter, which is another secret sauce that I do, is that I make banks compete against me. Here's my RFP, essentially. Here's the way that my books are structured. I've sent this to 5 banks. Come back to me and tell me your best deal. I get better rates than everybody. I get higher line of credit. I get more advantageous terms because I've made them compete for me. But if I know how to do that, and I come in and go, dude, the reason why you can't grow is because you don't have cash. And I fix that for you, and I say, well, my fee to do that would be $50,000. But I'll take equity in your company. I'll let you earn the $50,000 times 2 before you ever pay me a cent. Now it's a no-brainer transaction.
No-brainer. No-brainer. Dude, you're leading with value. And people are like, well, why would I go and do all that? What if they don't end up, cutting me in on the deal? Or, there's going to be some of those that occur. You're going to give out so much free information. People are going to take some of it and go do their own thing, and they'll never thank you for it. But I can tell you, dude, for every seed that's sown of value given, it creates a tree that then drops 100 other seeds, and all of those end up taking roots as well. And so it's this multiplier effect. What you give is not what you get. What you get many times more than what you give when you always lead with value. And I think that's a powerful component, and that's how we got connected.
What I've found is that if someone were going to cut me out, you're out of my life anyway, because you're out of integrity. Yeah. So what will usually happen is we'll say, we couldn't make the deal work. But because you had such a pleasurable experience with me, you'll call me 6 months, a year, 2 years ago. I don't know if this is in your wheelhouse. Is it something you'd like to take a look at? And it may be, but eventually that seed that you planted 2, 3, 4 years ago is going to continue to grow into a forest. Yep. I love it, man. So what does the next 12 to 24 months look like? What are you looking at in the marketplace? And what are those opportunities? So distressed buyers. So people that get themselves into distress that I can fix is what I'm looking for. Service-based businesses, distressed sellers, not distressed buyers, but distressed sellers. If someone has gotten themselves into a condition that they can't figure themselves out of, a lot of it is that I can usually coach them into it. If I can help them to see, which is a lot about what my show is about, is I just want you to see a more broad perspective. That's it. If we're looking at a number on the ground and I say it's a 6 and you say it's a 9, if we can look from a more broad perspective and go, actually, we're both correct. Yep. And if I can coach a business owner into that, then I don't need them to exit. So if I see that there's value in the way that they view the world, I'll take a minority stake in it. Yep. If I like the asset, if I like the business structure, if it's producing cash flow, and I can do something with it, and they want to exit, now I'm just structuring the terms. I always use this analogy that if I drive up in a brand new BMW M3, you don't ask me how much I paid for it or what my APR was or how long I have it financed. You sit down and say, man, this looks fast and the seats are comfortable. Nobody ever asks about the T's and C's. And that is where I'm assuming in real estate it's the same way. The deal is made in the T's and C's. Yep, 100%, man. Well, dude, I'm excited. I appreciate you sitting down. Ton of great insights. I love the industry that you're in and that space that you're in. I think there's going to be so much incredible opportunity, especially as those baby boomers kind of age. They want to get out of the businesses. They want to retire. They're willing to sell or finance it. You could take a lot of those insights and a lot of those strategies and that you have, dude, and just put the timeline on it and be able to create a
a retirement plan for them, right? Create a huge income for you, find some great operators to come in and take these things to the next level. And I think I'm excited to watch the journey over the next 2, 5, 10 years of what you've already been able to accomplish and then where you're going to, man. So I appreciate you being here, buddy.
Absolutely. Pleasure.
All right, I hope you got a ton of nuggets out of that. Luke is a great guy. Make sure you're following him on social media. We'll share his contact information in the show notes. And do me a favor, put your biggest takeaway in the comments so that way I know what was a big win. If you have any questions, please put it down there and I'll create some content specifically answering your questions. And if you would do me a favor, like the video, subscribe to the channel. We try to put out as much value as humanly possible for free in order to make an impact and help you earn money, save money, and multiply your money. And that's all I ask, is for you to subscribe and like the channel. So I appreciate you guys being here. See you on the next episode of Spill the Beans.